Good morning. Good morning. Hello, everybody. Welcome to the Premarket Prep session, deluxe Premarket Prep session here for Monday. What is it, May 15th, 2023? This being our daily session where we go over any and all info necessary to keeping you consistently profitable here across these markets. I'm your host, Adam Holland, stock options expert market strategist, and we're here to dive into relevant news for the day. Yes, good morning. Good morning. Hope everybody had a nice weekend. Tons of traveling for me again. I haven't checked what's up with my schedule this week, but I really hope it involves me relaxing, right? And just not trying to get back on that normal schedule. Like I said, hope everybody had a great weekend. Happy Mother's Day to all my mothers, right? You guys make the world go round. So super, super appreciative because without us, or without you guys, we literally would not be here. But even, further than physically, right? I feel like a mom has a very, very instrumental influence on, their child in huge ways, right? My mom is a very, very pivotal and instrumental figure in my life, and I thank God for her every day. So to be honest, I feel like every day is Mother's Day. So huge thank you to all the moms out there making it happen. I feel like there's no more resourceful living being on earth than a mother, right? But let's get into what we have going on today. As always, we've only got one goal for this session, right? It's simple, but that doesn't mean that it's easy, right? It's simple, but it doesn't mean that it's easy. What I'm talking about is getting 1% better. That's the goal. So make sure you make a public declaration of your intention to get 1% better by the end of this session. If you see everybody throwing the ones in the chats, that's exactly what this is for. By the way, specifically, I see a few moms in here. Thank you to you guys. Happy Mother's Day to you guys. But yeah, make sure that you come in here geared up, ready to go, right, with intention to dominate nothing but your former self, your past self. That's all you have to do, right? It's you versus you, not you comparing yourself to one person or to anyone else, right? You're running your race, and as long as you're a little bit faster than you were yesterday, that's a great day, right? It's a great day. So continue to do that. Continue to invest in yourself. I'm going to download, let's see here, what we got going on in terms of the week ahead. And then we'll dive into our Monday specific news. So in terms of top news right here for the week ahead, the ticking bomb of a potential default by the U.S. government will be front and center with investors again next week. Treasury Secretary Janet Yellen will meet with J.P. Morgan Chase CEO Jamie Dimon, Citigroup, ticker C, CEO Jane Fraser, and other board members of the Bank Policy Institute in Washington to discuss the debt limit talks. Dimon has already warned that markets will be gripped by panic as the U.S. approaches a possible default on its sovereign debt. On the same theme, Seeking Alpha analyst Logan Kane advised the standoff could be even worse for markets than anticipated. So again, we're seeing, this kind of ticking bomb of potential default with the U.S. government, right? What will be the effects, yada, yada, yada. It's one of those things where, again, you kind of, until it affects things, you don't worry about it. This has been building and building and building for months, and at this point, it's kind of like, all right, we're going to make a deal. Is something going to be worked out, right? Eventually, it always is. But, we always get to these really, really high tension points where it's like before we we get to these high tension points where it's right before this deal is made, everybody thinks the sky is going to fall. If the deal isn't made, then yeah, that could cause some issues, particularly for government employees and things like that. But at the end of the day, as of right now, this isn't something that's directly affecting markets. So we'll see, if this does start to manifest, if this changes anything. Of course, we have Janet Yellen, who's literally, I think, wakes up every morning now and talks about the doom and gloom of, default by the U.S. government. I feel like that's just her tune that's on repeat. So we'll see what happens. We've been getting kind of statements here and there from Biden as well about how like talks are being had, but they're not getting anywhere and this and that. So, it's kind of like we wait until we hear something different. Sharon, hey, I wasn't able to see your graduation this weekend. I know. I wish that we had, like, we were in North Carolina as Sharon's stomping ground. And it was, we were in and out very quickly though. Like we got in town, slept, woke up, was at A&T graduation, and then just kind of spent the day with fam. And then we had to be out and back for Mother's Day. So it was like not a whole lot of time, but next time I'm in North Carolina, I definitely have to pull up on you. Love being there. But like you said, I wish I could have like popped in and seen you, right? Hung out a little bit. So I'll need to go when I have like less things going on and more time to just like hang out and chill. Um, but yes, it was a great time. Enjoyed, cheering on my cousin, being an exemplary I guess an exemplary exaltation of black excellence, right? My man was really did his thing, got his degrees, multiple different degrees. So super happy to be there to support him. And of course, tons of black kids, right, that look like me that are out here doing it. Um, so it was amazing to be there and cheer everybody on. We're all in this together. And I feel like the sooner we realize that, the sooner everybody ends up a lot better off. In terms of earnings news here, earnings spotlight, we have a couple of companies, but we got a few household names, but overall no real heavy hitters now that we've had kind of the big wig tech companies all report. So on Monday, today, pretty much Tower Semiconductor, TSEM, is like the only kind of big one. Tomorrow we've got Home Depot and Baidu, ticker BIDU. We got Cisco on Wednesday, Target on Wednesday, TJ Maxx on Wednesday, their ticker is TJX, and Take Two Interactive, TTWO. Then Thursday we've got Walmart, Alibaba, Applied Materials, Canada Goose, and Raw Stores. So really Walmart and Alibaba being the biggest out of those. Alibaba's been on a little bit of a run recently. Tough though, as always with Chinese stocks, just because it's a completely different world, and there's news that can come out overnight that can just wipe you out. So, it'll be interesting to see what Alibaba has to say. But will I play Alibaba? Probably not. We shall see, though. We'll see. We'll look into it. Overall, though, again, anything you put on earnings, right? There's numbers of different ways to play earnings. You can play post earnings continuation. You can play pre earnings run up. There are a number of different ways to play earnings, right? So there are a lot more means at your disposal than just calling your bet on whether or not they're going to beat or miss, and then waiting to see if you're lucky enough to end up having that make you money, right? Because we know there's a lot of things in between that can kind of throw that off kilter. But Friday, we've got John Deere and Foot Locker. So John Deere, their ticker is DE, and then Foot Locker's ticker is FL. Now, in terms of tech news, spotlight on AI, when is it not? Let's see here. AI will be a major topic next week with investors in the wake of the strong reception at Google's I/O event that was called a clearing event by some analysts. Seeking Alpha contributor Zen analysts explained the event as Alphabet's commitment to maintaining its position in the AI landscape and highlighted the company's potential for long-term growth and value creation. Now, of note, OpenAI CEO Sam Altman will participate in a bipartisan discussion at the U.S. Capitol on May 15th on the topic of AI in the future. OpenAI's ChatGPT has disrupted thinking on the integration of artificial intelligence into the business world. Following the launch of ChatGPT, OpenAI is now one of the fastest growing websites on the planet and is closing in on generating 1 billion unique visitors per month, which is absolutely insane, right? Absolutely insane. By far and large, the kind of largest growing piece of software, tool, whatever you want to call it, in recent history, and probably ever, right? This will probably be the largest growing software tool ever, when it's all said and done. And there will be tons of discussion on regulation, this, that, and the third. I saw that Google is actually going about, I think they're working with, what was it, Wendy's? I think they're working with Wendy's in order to like automate drive-throughs. So, it's kind of one of those things where ChatGPT, is kind of out there in front as the cool, amazing, shiny thing. And they are definitely the best in the space at this point. But Google still does have those connections, right? Google still has that name value, that name brand recognition. I don't know how many more people are using Bing, but to be honest, even with ChatGPT integration, I'm not using Bing, right? I'm using Google still, which is just, I think, something that's important, to think about, is that it takes a lot to move people off of where they already are. They can see something like, oh, wow, that's amazing, and still go back to what they know, right? Go back to what they're familiar with. So Google does still have that huge leg up of being Google, right? So, them kind of going out, making deals, closing deals. You don't need to have something as advanced as ChatGPT to do a lot of things that can bring a lot of money into your bottom line, right? Like automating a drive-through. You don't need to be, an amazing, huge language model in order to take orders, right, at a drive-through. And Google's Bard can probably at least handle that. So, Wendy's, I think they said they're going to be, coming out with a few more, like some automated stores. They're AI enabled. Cool for Wendy's. Unfortunately, if you're listening to this and you're about to go on your shift at Wendy's, right, you might want to look at shaking things up, right? Figuring out how to make sure whatever money you are getting from Wendy's in the next few months, you can do something with, right? You can flip it and tumble it, multiply it, because it might be Bard, asking you if you want to have their French toast sticks or something for breakfast instead of you, right? So you don't get scared about that, but you do act, you do execute. That's got to be the first goal and the most important goal. Now, in terms of the rest of the news for the week ahead, not too much, so we can dive into our Monday specific news more so. Now, in terms of Monday news, shorthanded is our top headline. Renewed concerns over regional banks has been pushing regulators into uncomfortable areas, like facilitating and allowing the largest U.S. banks to get even bigger, which is something that I've talked about here on these sessions beforehand. Other things that have been invoked are systemic risk exceptions, which allowed the FDIC to guarantee banks' uninsured deposits, and there are now even proposals for blanket deposit guarantees. The fear here is that the situation could spiral if left unchecked, and traditional policies may be overlooked to stamp out the crisis. Snapshot, another hot topic of discussion, has been centering around the short selling of bank stocks. Under the strategy, investors borrow shares with the expectation that prices will drop, and if all goes well, they buy back the shares for a profit. In September 2008, the SEC temporarily banned short sales, primarily in financial stocks, in an attempt to protect companies and stabilize the market. But this time around, regulatory intervention might be even more controversial. So, the case for a ban, the economic outlook is already uncertain given things like the U.S. debt ceiling and falling commercial real estate values. Stress on U.S. banks could be a defining factor that pushes the economy into recession, especially for those that argue that continued stock plunges have real world effects like spooking depositors and prompting bank runs. U.S. federal and state officials are looking into whether market manipulation has prompted recent volatility, while JP Morgan CEO Jamie Dimon has said that regulators should look at banning the short selling of bank stocks. So this is obviously something that's super controversial. It's like, whenever people feel like regulators are like, hey, we're going to stop in and, or step in and stop this trading from happening or stop this thing that is normally legal and kind of ban it for now. It's annoying and it sucks, but it does have material, it does have material weight on what's going on right now in terms of markets, like especially with banks. Like all this is driven by fear. So if you have all this short selling going on, people are going to pile on and basically take advantage of the fear. They know that if bank stocks drop, it's this dragon eating its tail, right? Bank stocks drop, people lose faith in banks, people withdraw money from banks. Withdrawing of money from banks causes bank stock to drop, right? And it's just this circular, and that's how you get these crashes. So if you can stop some area of that feedback cycle, then you can start to alleviate those issues that are going on, and that's what regulators are looking to do now. So is it right? It depends on which side of things you're on, but at the end of the day, is it right to take advantage of fear by stoking it and shorting these bank stocks, right, causing people to yank their money out of banks? You could argue not really, right? So it's just kind of one of those situations where it is what it is. You could argue both sides. Neither side really has the moral high ground. It's kind of just like, all right, can we stop this dumpster fire before it turns into, a raging dumpster blaze? That's really what they're looking to do. So, leaving things in place, the short selling ban in 2008 only lasted 3 weeks, and many have argued that the restrictions were not only unnecessary, but actually harmed market quality and stability. Impacts cited are liquidity and pricing efficiency, while short sellers can use other instruments like futures, options, and swaps to get around the ban. That's very true. That was going to be my next question is, okay, how does this ban look? Does this extend to derivatives, or is this just short selling? Because the majority of people I feel like they could go in short are actually going to be using puts, right, and not actually shorting the stock in the traditional sense of shares. Many also contend that shorts balance the market ecosystem by shining a spotlight on companies that may deserve more scrutiny, while economists from Goldman Sachs have argued that such a drastic move on bank shares looks unlikely in this scenario. So we'll see, but it's pretty hot news, right, that the SEC is even thinking about banning short selling of bank stocks to alleviate this crisis. Now, in terms of bankruptcy news, media struggles. So, the digital publishing industry has claimed its latest victim, with Vice Media filing for Chapter 11 bankruptcy protection and listing both assets and liabilities in the range of $0.5 to $1 billion. It's a major turn in fortunes for a media startup that was valued at $5.7 billion at its peak in 2017, but was battling for a valuation of just $1.5 billion in December 2022. It's crazy because I loved Vice Media, like in college. Coming up, I mean, when do they have that valuation? Yeah, 5.7 billion, that was literally the year that I graduated college. So in college, like my friends and I, we all watched Vice. They had great news, great information. They had like a ton of different shows, and yeah, we like loved Vice. So it's just crazy to see them, go from where they were to now having to file Chapter 11 bankruptcy. And it just goes to show you that it does not matter where you were 5 years ago, 6 years ago, 4 years ago, right? That doesn't matter. It's where you are now, right? Your performance in the past has absolutely no guarantee of your performance in the future. That's why it's so important to make sure you're continuously investing in yourself so that no matter what happens, right, as all these things are developing, you don't end up like Vice, because what is valuable today is not valuable tomorrow. You have to be constantly feeding yourself information to make sure that you stay up to date with what is valuable and how to execute in a way that provides value. And unfortunately, Vice just did not keep up. So SPAC 7GC was also once in talks to merge with Vice Media. However, the parties walked away from a potential deal in August 2021, and it may now end up being sold to a lender consortium. In terms of current ownership, private equity firm TPG owns 44% of Vice Media. Disney is also a significant shareholder of the company. Wow. With a 16% direct stake and another 10% via its holdings in A&E Network. So Disney owns a piece. Who knows? Like maybe Disney will do something with it. We'll see. But just, kind of the end of an era here when Vice had so much going on. And now to see them kind of drop like that, it just further lights that fire under your butt, right? That you got to make sure you are consistently and constantly investing in what is necessary to keep you on your A game. Because if you don't, things change very quickly, right? It used to take 10 years for 20 years, right, for a company to go out of business for trends. Now, because of tech, because of social media, all of that, trends happen so much faster, right? And your deceleration can come so much quicker than it used to. That's why you have to constantly be on. It's not like, okay, I need to be on the lookout for things that can help me. It's that regardless of whether or not there's something happening in my sector, there's something happening that directly affects me, I'm constantly investing in myself. You don't wait for the storm to come to build the ark, right? You're constantly building. And that way, when the storm comes, you can continue to building. You don't have to think about, right, whether I'm building on land or building on a boat. I'm still building because I was investing in myself when things looked good, when things looked easy, right? So throw a 7 in the chat if you're committed to that. I'm committed to that. That's what I'm going to constantly continue to do, right? Whether things are great, things are bad, what have you, right? Whatever is happening, I'm going to make sure I'm investing into myself so that you don't end up like Vice. Because again, Vice was on top of the world. I'm telling you, literally everywhere, right? Vice was literally everywhere. And now they're filing for Chapter 11 bankruptcy. So, got to make sure you stay on the cutting edge of things, stay on top of things in every area, but especially things where you're like, okay, I'm picking up this skill, right? You need to have multiple high value skills in this world in order to remain, economically viable. Constantly invest in those skills, right? On the back of that, Chart with Confidence Challenge. We got that into June, right? See people signing up over the weekend. If you haven't done that, head to the link in bio on Instagram. It's right there, or chartwithconfidence.com, right? But that's my biggest thing after going through and doing these one-on-ones and been having a lot of awesome one-on-ones. But that is the one thing that a lot of people struggle with is their charting and charting with confidence. And what I've been finding too is even people that have been winning trades, they've been showing me, okay, this is my thought process of going through. And I'm like, okay, this worked out, but it actually worked out for this reason, not because this chart was correct, right? Because they'll have flags that are way too long of flag poles, and instead of taking the highs and lows they should be taking, they're taking different highs and lows, and that ends up being unsustainable, right? Because if you're basing your decision off of something that is not the actual driving force behind it, then that gives you a false foundation, and false foundations are worse than not knowing what you should be doing, right? Because you're moving forward thinking you're doing the right thing, but it's built off the wrong foundation. So if you're ready for a 3-day charting boot camp, we're doing nothing but charting. You guys have exercises, right? You're having quizzes where you come back, you're doing them, and then we say, okay, this is how you're looking to do it. This is how you're looking to chart. Make sure you're in there, right? I was asked about it, right? Because I've had more kind of interactions with people as I've been doing more one-on-ones, more discovery calls, been meeting people in a lot of different arenas of their journey, whether they are new or experienced. And the biggest thing for them is like charting, because regardless of whether they've learned from me or learned from someone else, like it's just hard to develop any confidence at all in trading without the ability to chart yourself, right? When you see me chart, becomes a lot easier, but then if I'm not there, you're having to chart something yourself, it can be a lot tougher. So make sure that you're there in that room, right? That virtual space for that, because that is literally just all solely dedicated to the charts, right? So you can walk out of there feeling very, very confident and ready to execute. Because at the end of the day, you can know all this different knowledge, right? But if you don't have the confidence to execute, that knowledge it doesn't do you any good, right? It doesn't go anywhere. So again, that's at the link in bio. Make sure you're ready for that. That'll probably be the last type of live masterclass thing I do this year. I don't normally run like multiple challenges, but this is something where I was like, hey, I like this idea that was floated to me. So if you guys do have any good ideas, right, that doesn't mean that if you have an idea for a challenge, it's going to happen, because you got a lot of stuff to do. But if you do have a good idea, let me know, right? Because this was something that actually was floated to me, and I was like, hey, that sounds like exactly something that people could use, especially right now when you look at the price action that we've been getting and going into the second half of 2023, right? We're kind of at that same point that we were when we did the cutting edge challenge, where it's like, if you get locked in and you're ready to go, you stand to make a lot of money if you know how to leverage what the charts are telling you. But if you are looking at the charts, and you looking at the charts is like you playing a game of telephone with 30 people, right? The charts convey a message. If you are understanding that message in a jumbled and garbled way where you can't fully grasp the information that's telling you, you're not going to be very efficient in leveraging that and turning that into profit, right? So make sure you're locked in, loaded, and ready for that. In terms of the end of June, very, very excited for that, and I'm going to be pumped in order to get that going. Now, in terms of, and also, you don't. Again, this is another thing where at any level you are, you can come in and be involved in this, right? Register for this, and you're going to get something out of it. I don't care if you've done stock options made easy. If you haven't, right, this is where, regardless of what you do, what you trade, what you're going to learn there is going to be huge in terms of you having confidence in operating in markets. So I feel like a lot of the time it's been me teaching. This is going to be like 50-50. It's going to be a lot of me. It's going to be me teaching, but then it's going to be a lot of like, let's go back and examine this time period. Pull this up. All right, everyone chart this area on this time frame. Chart this area on this time frame. Chart this area on this time frame, right? And we're going to go through and examine them, right? Hey, you actually had the wrong low for this. You had the wrong high for this, right? This is how you're going to go about doing this in the future. This is what you want to look at. All those things so you can make sure that you can do this on your own, right? We're becoming the weapon. That's the goal, becoming the weapon. And each time we do something, we're focusing on that. Now, in terms of Merger Monday and merger and acquisition news, this company, Oniok, ticker OKE, has agreed to acquire Magellan Midstream Partners in a cash and stock deal worth $18.8 billion, including assumed debt, and resulting in a combined company with a total enterprise value of $60 billion. Now, the merged firm will become one of the largest in the U.S. energy transport and storage business after last year's energy boom left companies with a large windfall of cash. That's not all. Newmont, ticker NEM, has sealed a $19 billion deal for Australia's Newcrest, paving the way for the world's largest gold miner with nearly double the production of its nearest rival. Barrick Gold, ticker GOLD, speaking of down under, Australian gaming technology developer Aristocrat Leisure agreed to pay $1.2 billion for Neo Games in a smaller transaction than the other two, but one that sent the latter shares up 120% in pre-market trading. So Neo Games, ticker NGMS, looks like they're going to be up big here this morning on merger and acquisition news. But yeah, I feel like we've been getting a lot of news in terms of kind of like attempted mergers, but not a lot of them have gone through. So I feel like we just need to see if this actually goes through, and if they get the approvals that are needed, because I feel like this news is always publicized where this company buys this company is acquired, right? This, that, and the third. And then you look and you're like, okay, what does that translate into, right? Will this actually happen? Will this actually go through? Because FTC, the SEC, they've been cracking down under the Biden administration. Not a lot of these deals end up happening. So maybe, this Australian deal will happen because that's not kind of U.S. governed, right? But other than that, I just try and take any merger and acquisition news with like a grain of salt, because you don't know how it's going to end up. Central banking news, Fed's number 2. While he has served as a board governor since 2022, Philip Jefferson has been officially nominated as vice chair of the Federal Reserve. Jefferson, a former Fed economist and vice president for academic affairs at Davidson College, would replace Lyle Brainerd, who left the number 2 role at the central bank to head up the National Economic Council. In the vice chair role, Jefferson would help shape the agenda for rate-setting meetings and has been known to ascribe equal importance to the Fed's dual mandate, even in the era of high inflation. Biden also announced that he will renominate Lisa Cook for an additional full term as a member of the Fed's Board of Governors, while nominating Adriana Kugler, U.S. Executive Director to the World Bank, to an empty board seat. So some reshuffling at the Fed doesn't really mean anything for markets. Now, in terms of today's market, we're looking pretty green across the board. Not pretty green, pretty much all green, which not a surprise if you see what we've been doing the past few sessions, because it's literally just been in a range where we immediately drop to the bottom of the range and then pop back to the top of the range no matter what is going on, right? So that's kind of been the movement that we've got in the past 3-4 sessions, where it's just been, same thing on Friday. We open, we hit the top of the range overnight, we drop right to the bottom of the range and pop right into the front. But in terms of today's markets, in Asia, Japan, we're up 0.8%. Hong Kong, we're up 1.8%. China, we're up 1.2%. India, up 0.5%. The footy in London is up 0.5%. Paris up 0.4%. Frankfurt up 0.3%. The Dow up 0.3%. S&P up 0.3%. NASDAQ up 0.3%. Crude up 0.6%. Then we've got gold flat. Bitcoin up 2.1% to 27,413. So Bitcoin hitting that 30K level and then really struggling with it ever since. Today's economic calendar, we have Bostic, who I guess is on right now, who's a member of the Fed. We've got Kashkari, who's a member of the Fed, speaking at 9:15. Then 12:30, Barkin. Are any of those guys like market movers? Not traditionally, but you can't write it off, right? If you see some volatility, that could be where it's coming from. Now, our rapid fire bullet point rundown to close us out. What else is happening? Big moves. Argentina to hike rates by 600 basis points to stave off inflation. Activists engaged capital to start proxy battle with Shake Shack. Biogen's Alzheimer drugs that may raise Medicare costs by up to $5 billion. C3.ai, whose ticker is AI, says preliminary Q4 revenue exceeds estimates. Musk names NBC Universal, ticker CMCSA, executive as new Twitter CEO. Tesla to issue software fix for more than 1 million vehicles in China. Binance to exit Canada due to rules on stable coins and crypto exchanges. And then wheat futures in focus after USDA forecast inventories at 16-year low. So we might get a run on wheat futures there. CVS Health, ticker CVS, said to shut down clinical trial business. And then AMD's opportunity in AI might be much bigger than first believed. So, I mean, to be honest, I think that all these semiconductors, right? Anything that's driven on data and processing, which AI definitely is going to affect these semis. So I feel like, regardless, maybe people thought that NVIDIA had a larger market share than AMD did, but AMD crushes it, right? They're a great company and they'll continue to grow along with anything else that's software-based, software run. So yeah, I'd expect them to be a big beneficiary of the AI boom. But that'll wrap us up here in terms of news here. Pre-market prep news for May 15th, 2023. We're back on the horse. I'm super excited to be here. I might go drink some more ginger tea. Like I said, when I was out of town, something I had left me with a stomach bug because I did not get much sleep. I was tossing and turning all night, and woke up and immediately hit the ginger tea this morning. But I am excited and proud to have been able to still hop in here, still get this done, right? And get back on track this week after, having some traveling over the weekend and needing to recenter myself. So, in terms of like market mindset, it's always important where if you had stuff that shook up your market routine, make sure you're getting back into it, right? Your journaling, your mindfulness, your diet, right? Your exercise, your sleep. Get back on track, right? Recenter yourself. That's really, for me, I like using myself as an example. That's a big thing that I'll be focused on right this week and in these coming days is kind of refocusing, recentering. Thank you for the camera for refocusing. Refocusing, recentering, right? And making sure that I'm ready to kick butt when that bell rings. But other than that, everybody, I hope you got something valuable out of the session, right? Throw a 5 in the chat if you feel like you got 1% better than how you entered this session. And in terms of this week, right, it's pretty much taking what the market gives us, remaining patient, not forcing anything, right, and operating in a way that is best for you. So let's commit to doing exactly that today as we dive into another fresh week of opportunities. Continue pushing through, getting 1% better. That's the goal. Everybody have a great rest of the day. We'll be back here tomorrow morning for our next pre-market prep session. Have a great one.